Hey, good morning, everybody. It is Ready, Set, Trade in Friday, the 2nd of June. Welcome aboard. Good morning, everybody. And we have markets going apparently higher once again. All right, let's get started for today. So what do we have? We have the jobs report coming out this morning. And how did it score? Actually, it was a big beat in terms of that. Now, a little bit of something to keep your eye on is the unemployment rate actually ticked up quite a bit. So look at this, prior revised also. So here is prior 253, prior revised 294, consensus 190. So I think they sandbagged this thing. I think they set such a low bar that it was pretty easy to blow through this. All right, but 339, that's pretty good. Private payrolls also followed what we saw with ADP yesterday morning, which was a big beat. So the jobs market refuses to die regardless of what the Fed is doing to it. So the Fed, therefore, we're starting to see a little bit of increased probability once again. Just maybe in 2 weeks, they're going to raise the rates anyway. We don't know that. But watch the probabilities over the next week that it will shift around quite a bit. Now, here's what's interesting is that even if we don't do anything in June, they're planning on something happening in July. And this is probably the most important thing that I've seen in a while is that we're sitting at a net zero interest rate by the end of the year. So what this means is the Fed funds futures have started to price out a recession. In my mind, the Fed funds futures are starting to ignore or basically discount the fact that we may not have a recession later on this year. Okay, so let's see. We had some earnings coming out overnight. Let's look at these. We're going to go out to our tick chart for today. And let's see what happened with Lululemon. Apparently, they knocked over their numbers, right? Estimated $1.96 came in at $2.28. Pretty strong. Now, this one's been beat up quite a bit lately as well, too, just because of the whole debacle with, firing the employees that are chasing down crooks. That's not allowed to happen anymore. So, pretty strong move from 380 down to 320. We'll see if this does bounce. We'll see if this bounces today. Well, it's going to bounce. It's just a matter of how much. Okay, let's see. What do we have next? Zeroscape and Dell. Zeroscape is up. Dell is slightly down for earnings today. Not much going on next week. Nothing going on today. Nothing next week. We may have GameStop. We may have DocuSign, Neo. Next week we'll be here Monday through Friday. And the week after that we'll be here. It's the week after that, I think, on the 19th, we have a market holiday. So we may be adjusting a trade today. I may just go ahead and do that. We have a 43.20 for a 30 June, 43.20 for a 30 June. Let's see if I can find this position. Got 5 minutes to go, so plenty of time. So 30 June, let's see if I can find this guy. So 30 June with a 43.20. There it is. So it's this one here is getting a little hot. And I think once we open up this morning, I think the delta threshold will fire. I think we're going to have a delta threshold. So what we may end up doing this morning is closing down these put spreads and then moving them further up to the new 30 delta up here. So that will bring in a credit, overall credit. It will narrow down the trade. It will probably also mean that we're going to have to stay in this trade beyond the normal time threshold. And that, if we do get a sustained breakout from 4,200, we're going to see a lot of these happen in the next week or so. It's just part of normal. It's not a win or a loss or anything like that. It's just a normal activity for these types of trades. Okay, let's get started. So yesterday we took a pause on the 0 DTE, and I'm kind of glad we did because we had quite a decent move. Quite a move. Turned into a big trend day. It didn't start off like that. Started off with some downside movement, and then boom, it hit about 10:30, about an hour into the session. This is what we're finding lately, that market just took off. Let's see if we can get this to work today. So there was our opening range. Opening range was a little bit bigger than normal for a low volatility day. And then here's the extension of the opening range setting up. So if we'd taken an iron fly, we would have gotten one chance to get out as the price dipped back at about 10:15 Eastern time. And after that, it was off to the races. Okay, so here we go. Now notice what happened. So here's the opening range. I mean, this may have been a good setup here. If we'd entered at 10:02, we would have had till about 10:30 or so. And sometimes that works and sometimes that doesn't. So that's not a whole lot of time. Sometimes there's a good chance we would have been able to get $50 per contract. Although we would have been sweating a little bit on the breakout from there. Okay, so that was our one chance, and then this thing just took off. Notice how the price rebounded off of the anchored VWAP and just said goodbye. Did not even really salute the expected move on the way up, hardly reacted at all, and just kept on heading higher. Now, I think this was the Biden fall on the stage. So we almost had a hedging situation there, but let's make sure this one is still set up here. So 43, yeah, there it is, 43.25. So right now it's showing a delta of 28, and that may fire by the time that we get our opening bell, which is coming up in 45 seconds from right now. We also have some 7 Julys, which we have 43.75, 43. So these are getting close as well too. So these may hit at, let's see, this one. Yeah, both of these are 30 deltas. So we may be busy this morning. Okay. So we'll keep an eye on that. In the background, we want to check our opening print for the expected move on 2 June. Here we go. Right now it's sitting at 20.649. And we're going to start our day at 20.77. Good morning, Fred. Good morning, Len. 20.77. All right, let's see where opening print is today. Opening print for today. We're going to go over to the gap chart. A little surprised that I'm not seeing alerts firing off left and right now. Yeah, look at this. We have Delta 31. We have Delta 32. So we're probably going to be doing those. We're going to be doing those adjustments at some point. I'm not sure why this is not firing. Okay, goodness, look at that. Big upside gap. Big upside gap. So opening print for today, 42.55 and a quarter. That's on the ES, 42.55 and a quarter. All right, so that gives us an upper expected move, 42.7602. Look at this thing go. Man. So we're going to move this upper expected move. That's going to be moved up quite a bit. 42.76.02. We could be having the bears on the run here. But everybody's like, oh, there we go. Okay, so there's an alert going off at 43.40. I think we're going to be busy this morning. So the other one, our lower expected move, is 42.34.48. 42.34.48. Now, normally I don't do these adjustments until the end of the day, but man, do we have some ticks going crazy here. Market internals look really strong. And let's see. So the next thing that we need to do is we need to move our anchored VWAP to today. Let it start from today. Big gap to the upside today. So again, I don't know if this is going to turn out to be a bull trap. We don't know the future, right? All we can do is look at the evidence. So far today, we're getting some strong movement. All right, so let's do some adjustments, shall we? Let's do some adjustments. I got to open up E-Trade here if I can accomplish that. So the first thing I have is a 43.20, 43.25. Okay, so let's look at this trade. So there's a June 30th, 43.20. So we'll go into the SPX. And we're going to look at June 30th. And we should be able to see this. Should be able to see this position on here. Okay, so there is 40.25, 40.30. Okay, and here is, we have a couple of positions. First of all, 43.20. So now that's gone up to a delta of 36. So definitely we've hit the threshold. And this could be interesting because we have to, now we're not going to move the calls, but we have to move the puts. And it looks like both of these are at 40.25, 40.30. So we have a 2-for-1 bonus here. We have a 2-for-1 bonus here. We're going to get to move two positions at once. So the first thing I need to do is for both of these June 30th positions, we need to cancel the limit order that's out there. If we don't do that, we won't be able to place the trade. All right, let's go back out here. Let's make sure that that's exactly what we have. We have two June 30 positions, and both of these have 40.25, 40.30s. So we get to move them both at once. We get to move them both at once. So we got two contracts we need to do. Okay, so what we're going to do is we're going to buy this back, and we're going to sell this one. So limit debit, we're going to close out two contracts here. Right now, the midpoint's at 30 cents, and we'll see if we can get that order in place. We'll give it a few seconds here. If we have to, we'll bring it up to 35 cents. Okay, we have shut those down for 35 cents. Okay, so both of these positions, and I'm going to highlight them here to show that these have both been adjusted. Okay, so adjusted lower. So those are out at 35 cents. We'll come back to this in a second here. So now what I need to do, so filled quantity, I'm not sure why I still show anything here. And if we go out to the account and positions, we should see some call spreads. We should see call vertical, call vertical. Okay, so now we need some put spreads here. So we're going to do this in the same cycle, and what I'm going to look for is about the new 30 delta. Which is going to be, let's give this right around here, 41.90. So we're going to sell 2, buy 2. Going to try to get these for 95 cents. And there we go. Okay, so out for 35, in for 95. And those are the $41.85, $41.90. Okay, so the net credit was we just got 60 cents in. So what we're going to do is we're going to add this credit at G plus 0.60. So now we have 240 on both of these. Let's go back and regroup these positions. So now we have it did a nice job here. It did a nice job of grouping these. So let's go ahead and do this. Okay, so we're going to save that one. And then we're going to save this one as well too. Okay. Put that aside. Wow, what a move. What a move. All right, let's look and see what's going on here. I wouldn't be surprised to see this stall out. So that's a pretty serious breakout above 4,200. Now, let's see what we have in terms of volume. Is this a valid breakout? So I'm going to look at this on the SPY, and right now we don't have the entire day's volume. It looks like the 4380. We've had another one here. We're getting all kinds of alerts to fire today. Triggered. I may have more of these to do later on. Let's see what else is triggered here. 4325, we got that one. We did the 4340. $43.20. Okay, that triggered. Let's see if our 7 Julys. Yeah, we had one trigger here at 43.40. So let's go do that one. 43.40, 7 July. When it rains, it pours. Okay, so this one is now showing. So let's go out to our 7 July series. And we can see that we have a number of positions here. Okay, so 7 July, 43.40, there's a 40.20, 40.30. 40.20, 40.30. That's these two here. And let's look at our delta. Our delta is the 43.40, and right now the delta is showing about 35, so it's definitely hitting our threshold. Okay, so let's move this one up as well too. So this will be the 40.20, 40.30, 43.40, 43.50. And so what we're going to do is we're going to buy this one back, sell this one. One contract in this time. Okay, so this one's showing about 70 cents. So this one's a little bit newer. So let's try 75 cents. Oh, we still have our limit orders in place. So we're going to have to shut this one down. Cancel that order. Okay, so we're going to buy this one back, sell this one. One contract. I've got to do this slowly. Make sure you're doing the right thing. Okay, so we're out at 80 cents. And now what we need to do is we need to go up to the new 30 delta, which is going to be, let's say right there, 41.90, 41.85. One contract. Not getting a whole lot of differential here. That's only about $1. Not a whole lot of differential. So we'll try for $1. Okay, so we're only getting an additional 20 cents out of that one. Okay, so it's this one right there. Okay, so out at 80 cents. Oh, you know what I did? I set it up with a new $5 wide spread. So I'm going to have to cancel that out. Actually, the best way to do that, yeah, I'm going to have to cancel it out, unfortunately. So my new 41.90, 41.85. Going too fast, that's the problem. These are 10 wide. This is a 10 wide spread, and I need to shut this one down. Okay, I'm going to have to do this outside of this session here. I'm going to have to do that once we set, because sometimes I get this problem with E-Trade where they won't let me do it. So I'm going to fix that one. I'm going to have to make the put spread into a 10 wide. That's why we didn't get a very good roll. That's why we didn't get a very good roll. Actually, one thing I can do is instead of, I can just add a single option. That's probably the simplest way to do this. We got into the 41.90. I can just add a long $41.80 put. Oh boy, that's expensive. Yeah, I don't want to mess around with this thing. I'm going to get this thing settled once we close up shop today. All right, let's look at our 0 DTE. Let's look at our 0 DTE. We've got a nice range here. It's trending range, and it's still very strong. This is why I think that we really need to automate this stuff. This is why, human error will come into play, because I'm used to doing $5 wide spreads. You've got to slow down and check every single thing on this, because otherwise you will make mistakes just like I did. So now I'm going to have to fix that. Not a big deal. It's not going to cost me much. All right, let's see what we can do in terms of, this is a low expected move for today. And we're getting massive amounts of movement. And this is the biggest problem with this market right now, is we start out with a 20.77 expected move. We've already jumped up to about a 22 expected move. So can we do a 25 wide fly here and do anything with this? Let's take a look. Let's see what we can do here. Let's get rid of that. All right, we're going to center this around 42.60, and we're going to go 25 out. Go 25 out, and 42.60 minus 25 is going to be 42.35. So that's about a $15 credit. Let's look at the risk profile for this thing. Let's reset this. So that's what you're working with here. Starting to see some negative ticks. Let's go ahead and draw in our gap for today. So let's get to the gap chart, because that will tell us a lot as far as whether or not this is going to turn into an island. Okay, so there's today's gap, and let's watch how this market handles that. Okay, stop. Let's get rid of this one. That gap is gone. So here's today's gap, and we're actually working down from here. We're starting to work down on this gap. There is today's gap. Market's working lower. We're starting to see tick go negative for today. Is this going to turn out to be a big bull trap? If this market comes down and fills this gap, then this is going to turn out to be a bull trap for today. All kinds of price alerts firing today. Not seeing any real material time decay on this one yet. So I don't really like this trade right now. We're starting to see the movement. The movement is exceeding anything that we've got in the expected move. So this is a very perilous trade with the price moving around as much as it is today. So unless you feel that the market is just going to stall out right here and just do nothing, typically it doesn't do that. Typically we are going to charge harder and fill some upside gaps or go through the expected move for today. We haven't even tested the upper expected move for today. We still have relatively strong market internals. Let's see what we have in terms of stocks moving today. What is driving this market? First of all, we're going to look at the sectors here, sector spiders. And we have just about every materials is especially strong. The VIX is way down. Energy, financials. Actually, tech is not all that strong right now. Communications is weak today. So tech is actually in reverse. If we look at this, so if we look at Meta is somewhat weak today. Google is somewhat weak today, showing a hammer. A shooting star. That's not great. Apple, big event coming up. Selling into strength. Tesla's actually strong today. Amazon is actually strong, but selling into that shooting star, kind of an island gap showing up. People are selling into this move right now. So be aware of that. Be cautious. Microsoft showing another shooting star. This is only 25 minutes into today. Not seeing any material time decay to set up a 0 DTE iron fly today. Not worth it. Not worth it today. We're getting lots of big movement. I expect the big movement to continue. These are the conditions that institutions love, because you've got retail chasing after this move. This is the type of scenario where they love to sell into retail chasing this move. Now, I'm not bearish on this. I mean, this is actual, honest to goodness breakout above 4,200 right now. We can't tell the volume on this just yet. But that's a decent breakout, but it doesn't look all that healthy right now. Now, the only thing that really is healthy is the amount of energy that's available to sustain any kind of breakout. Now, we do have exhaustion on the 78-minute chart, so this may come crashing back down in for temporarily. And we're also starting to pick up on some linearity on the daily chart. So the daily chart's not exactly approaching exhaustion yet, but it will within another day or two. All right, 4 minutes to go. What's going on with this? Not looking particularly great. I mean, this could turn around. And we're not seeing any negative ticks yet, but it's all coming down here. So Fred is asking, how can you see big moves and not wanting to do an iron fly? All right, so to do an iron fly, we don't want big moves. We don't want a trend day. We don't want this trend day like this. An iron fly is as range bound as you can possibly get, right? This is a range bound trade. Now, I'm not saying this won't work, but it typically is not the type of strategy that you want with something flying around like it is. You've only got about 15 points of room. No, less than that. You got about 10 points or plus and minus 10 points of room to stay in the profitable range of this trade today because the expected move is so low. So today is a day where realized volatility is actually much stronger than implied. And here it comes down again. Here it comes down again. So realized volatility is much stronger than, or seems to be outpacing implied. Realized seems to be outpacing the implied. Now, all you can tell from the implied volatility is that the price or the options market feels that it will close within here. But that's not to say it can't exceed that. It just expects it to close within this point. But now we're starting to work on that gap. We're starting to see selling coming in. So I don't want to have anything to do with an iron fly today because we're just not going to be able to catch this thing. So first of all, it's not decaying. There's no decay here. We have a small expected move. The price is moving outside of, I think it's outpacing the expected move today. So that's why I'm not really all that excited about this. Not really interested. Okay, about a minute to go before we print, or oh, look at this thing go down. Coming after the gap now. Is coming after the gap. Does that make sense, Fred? I mean, we need to apply the context of what's actually happening. So many of us just get locked in like must crank wheel and do strategy today. Must crank wheel and do strategy today. We're looking at, we're playing range-bound trades in here. Range-bound income trades don't want the price to move much. Those are short gamma. You don't want the price to move much. So I don't like this at all. I think this looks like a day where retail's going to get taken out behind the woodshed. What does theta decay depend on? That is not happening today. All right, well, first of all, theta decay, let's look at the Greeks here. The Greeks, understanding the Greeks will help you. So first of all, what you don't want to see, this is short vega. So this means implied volatility needs to drop after you've entered the position. If the price is going down like this, what's happening with implied volatility? It's probably going higher. It's probably going higher. So we look at the VIX. The VIX started out the day really low and is starting to come back up again. We also looked at the expected move. The expected move started its day in the 20s, 20 point something, right? It was 20.77, and now it's 22.2. It's gone up 1.5 points. That's not what you want when you set up a trade like this. You don't want the price to move at all, right? You don't want the price to move at all. So what we want to do when we place an iron fly, or when we look to place an iron fly, we want to see the price basically do nothing at all. I don't mind seeing it move, but if you put this together with this, look at this. I mean, here's the gap. Here's yesterday's close. We started off today with a big gap to the upside based on the jobs report. And then did the market, when we opened up the cash market, did it have any interest in closing that at all? No. So we got this big short squeeze to the upside. And now what's happened is, now that retail has jumped on board, the institutions are selling into them. So we're getting some selling coming in. Now, there's no guarantee this is going to keep on going today, but I don't like the fact that we set up an opening range and now we're trading below it. This is much larger time frame consolidation, much larger time frame consolidation. All right, does that make sense? NASDAQ is almost flat for the day now. NASDAQ is almost flat for the day. Now, again, we don't know what's going to happen over here, Fred. We don't know what's going to happen over here, but all we can do is we can look at this and we can say, wow, we started off really strong today, and now we did a big U-turn and we're really weak. And this type of movement where you get this massive movement here, I mean, look at, that's a 40-point move to the upside, and now we've given back most of that. We've given back most of that move. Yuck. So no interest in playing an iron flight today. Now, if we had started off today with an expected move like 40 points, then we'd probably be doing just fine. But this has been the issue lately, is that we are not being well paid for taking on risk of selling options. So we got to be really picky about the days that we're going to do this. How can I tell the difference between retail and institutional traders? It's just market psychology. When you see markets breaking out into new highs for the year, you're going to have retail chasing after this. You're going to have everybody that decided to stay home and, work from home today going to be out there buying stocks. And, looking at these types of moves, these are the type of reversal candles that we have where retail buys the high. Retail buys the high of this. So we could be coming back down again. That wouldn't be surprising. It wouldn't be surprising, This is how markets move, right? You get everybody leaning in one direction, and then you sweep the leg out, and you bring them down in the opposite direction. And just when everybody gets bearish, then you rip it to the upside. That's how markets move. Okay. Well, guys, I'm going to go fix that trade, figure out why I can't close it down. I'm going to fix it, set up with the new credit spread on there. So if you need help with that, let me know. Otherwise, I'm assuming that probably nobody took the 10 wide spread that we set up, what was that, last week, I think. Okay, that's all we got for today. You guys have a tremendous Friday and a terrific weekend, and I will be back on Monday. All right. See you guys. Be good. Have a good day today.